Okay,
Yeah.
so with that, I will kick off. We'll have one more panelist joining us in a minute. But I think before we get to that, I can welcome everyone to the Data Economics Festival. So this is our closing session. If this is the first one you've joined, no worries. We did record everything that we did across the week, and that will be online imminently for you to enjoy. Once again, I know this has been a really content-packed week. So it's been exciting for me. I posted a number of panels. Pat and James and Nathan have each spoken, I think, on a few different ones. And I'm excited that we're wrapping up by talking about investment in data, because really the whole concept of investing in data, what that means, what it means now, what it will mean in the future, is really central to what we talk about in data economics, where we have this massive convergence of digital data in the many ways that we are living in a more and more digitized world, and that there's data being collected not only about us. We just had a session on personal financial data, and we've also talked about personal healthcare data and things across the week. All of that data that's being collected about us, it's being collected by businesses in enterprise about all kinds of activities in the world. It is kind of running up against the way that we think about investing, economics, value, the value of that data, what that data means, and really what, not only what that data can enable for us immediately, but what new financial opportunities and economic opportunities might get unlocked when we have that data available. So with that, I'd like to start. Let's see how to do this. I know we have a presentation from Nathan and a few slides, so that could be a good place to start. I'll briefly introduce everybody to the other folks I have on the panel, and then we can move into Nathan's slides. So with me today, I have ARKA, Managing Director of the Data Economics Company. He and I work really closely together. We have Nathan Yates, who has a background in finance and economics. He's been a professor in economics. He also has his own business, and he is just a really smart guy when it comes to all kinds of things in the investing and finance world. I always get some great insights from him. We have Pat McCarty, who is coming from the Washington, DC perspective, a bit of policy perspective on this. And Pat also has a background. I believe you were general counsel at the CFTC. Is that right, Pat? In previous days?
Yep.
And then we have James NICHOLLS, who is the managing director of Braithwaite, which is a boutique consultancy to the banking and financial world. James is very focused on the regulatory and compliance space. But beyond that, he's also a very innovative thinker around what is happening next in finance and fintech. And I know a lot of these banks and companies reach out to you, James, to help them think about the future. So I think we have an all-star panel here today. I am honored to host it. And I think we could start with some slides that Nathan's prepared on investing in data. So is that okay with you, Nathan?
All right.
All right. I'll let you cue those up. Perfect.
All right. And let's share my screen here. Let's share this.
All right. We see your screen.
All right. And then into the presentation here. All right. So, welcome to my session. I am Nathan Yates. I have a bachelor's in economics and finance, as well as a master's in finance. I have experience teaching and writing about economics and finance, in addition to the business that Jennifer mentioned. And so we'll start today just talking about investing in data. So, data absolutely has value, and investment professionals and novice traders alike recognize the immediate ascent of GameStop shares earlier this year, and was at the same rocket ship, and the question everyone's mind now was how much of the trading in GameStop is tied to retail investors. Answering that question correctly has been relevant, but the difference is an incomplete picture. So then, in another recent example, SEO's capitals found workers on equipment that ran in the vendor and they know what each other is doing. But they lacked the data. So, data assets, though, did not be tied to financial markets in order to be available to investors, especially to institutional investors. As their hedge funds that regularly utilize their assets ranging from established military to social media that decisions. In short, written finance are acutely aware of the value of data. So, if data has value and we recognize it, why not invest in data assets themselves? I can't think of a reason why not. And this is the honest design an NFT of a tweet, which is now then it's somewhat difficult to do as a legitimate investment than harnessing the actual value of data. But we have some questions to answer before we actually invest in data assets. And I have these questions right here. I think that we also don't have a level security yet for a data that assets. And also because these types of securities are similar, they haven't even been fully developed yet. They don't have the correlation, covariance, volatility, and return metrics that investors rely on in their portfolio concept. And so, it's not a surprise that other investors haven't really invested in data yet. That's still on the horizon. And also, of course, we have liquidity and that because the securities are so new that individuals don't have liquidity in that marketplace yet, and so that is another concern. And then also, what is the appropriate allocation of a portfolio to a data asset class? That the answer to that question depends on the answers to the answers. So, our last question is, do retail investors participate directly in the market so that there are pluses and minuses that are open to everyone versus just institutional investors, such as another consideration. But how much the important question is, should your portfolio be loan data? And that's what we'll talk about today. So thanks for watching, and I'll turn this over to Jane.
Nathan, thanks. That's great. I mean, I think most of us agree, at least I'm not going to say everybody. I always love to hear objections, but I think most of us agree that yes, our portfolios should be long data. And there are just a few things that you said that I think are very thought provocative. And as we go in and hear Pat's and James's opinion on this topic, I just want to repeat some of the points that you made, because at least for me, they stood out. I think, you know, I loved how you talked about, you know, hedge funds using all kinds of data that is not tied to the financial markets, and this idea that data assets don't have to be tied to financial markets to have immense value for investors. And you know, had that note about satellite imagery or social media. There are already people who are exploiting what they can find in data to find advantages in investing. And you know, then that also ties in, I think, with your point to retail investors. That I know Pat and James, we've all had this debate quite a number of times of how much exposure should retail investors have or be allowed to have to these kind of data-backed or data-rich instruments if they were to exist, and the thoughts around the volatility that could bring, as well as the thoughts around the liquidity that could bring, which I think Nathan brought up really well. And I also like the point about NFTs and this idea. I mean, I'm going to quote you directly from your notes on the slides here. Let's be honest with ourselves. Buying an NFT of a tweet is far more difficult to view as a legitimate investment than harnessing the value of data. And we've seen an explosion in the amount of capital pouring into NFTs, and yet, you know, it's hard to actually say what's backing all of those. Certainly, the art or creative asset that's behind that, but there are probably many more valuable data-backed things out there in the world that we don't really have a path to clearly investing in. So with that, I mean, Pat, I would love to get your take, and if you could share, Pat, some of the thoughts that you had emailed me around the idea of, you know, there are different commodity, I guess, would the commodities be the right word? You talked about energy, oil, you talked about gold, and kind of the path to starting to invest in these things maybe started with EFTs or other instruments before you could invest in them directly. You know, I'd love to hear more about that. If you could explain to us what you mean by that, what your thoughts are, and how we might get on the road to more directly investing in data.
Data to me is actually something which is a commodity. Yeah, and the thing is that it's there's a lot of different aspects to data. Data is not uniform. In fact, I actually think I can see this as being sort of following an evolutionary path, like you saw in the energy sector, where people who wanted to get some exposure to oil, they would buy shares in oil companies like ExxonMobil or Chevron. And you also had a futures market develop for WTI oil and Brent oil. And you had people basically, you know, taking a view on what the future price was going to be for, you know, barrels of oil, whether it's in Europe or whether it's in the United States or elsewhere. That was followed by basically getting into an oil ETF, an ETF that was, you know, a listed security on a national securities exchange that was backed by barrels of oil, and watching what would go on there. Now, the thing that's interesting about energy and oil is that the energy complex, which I consider to be more like the data complex, you've got all different types of energy assets. You have oil, of course, to start with. Then you have unleaded gasoline. You have jet fuel. You also have natural gas, and you have LNG and a bunch of other distillates that you could talk about, propane, talk about diesel, things along that line. And they're all in the same energy complex, but they have different prices and they have different users and other people. And that's why I think energy complex is very similar, at least in my mind, to the data world, because we've got, you know, during the festival here, they've been talking about personal financial data. You've been talking about people, you know, telephone records. You've been talking about medical data. You've been talking about financial services trading data, things along that line. And so while it's all data, they have different values and functions and people who want to buy them. And in fact, actually kind of an interesting thing is that data centers, everybody knows that there are these huge sort of, areas outside of the major metropolitan areas in the United States, which have, racks and racks and racks of servers, and they're data centers. In fact, there are several REITs, real estate investment trusts, that invest in data centers, and they produce a lot of money. And so people are already investing in at least those data centers. Now the question becomes, what are you going to do about data? And how do you get to what's going on? Well, we've already seen people investing in these data center REITs. We've also seen people investing in companies that actually take and process data. I'm thinking about Thomson Reuters as well as Bloomberg, maybe some of the, and I would say one of the biggest things would be like, take a look at any of the national securities exchanges like the NYSE, NASDAQ, CME, ICE. A lot of their revenue comes from basically data products. So, people can invest already in data just by having sort of a proxy through investing in the shares of some of those public companies. But the next step in this area would be basically to have futures contracts and swaps that are listed on different types of data. And, when we talked about the energy complex, you're talking about oil and natural gas and refined products like jet fuel and unleaded gasoline and LNG and things along that line. I can see there being futures on multiple types of data. And you're going to have to segment the market. You're going to have to find out who's interested in where you can find some liquidity, but I can see that happening. Futures contracts listed on futures exchange for certain types of data. Then I can also see the same thing with respect to swaps, which might be done bilaterally. But then I think you would also find at some point, you're going to see at a certain point whether you would have a data ETF, and people are buying a certain type of ETF. We have an oil ETF, we have a gold ETF, we have a silver ETF, all kinds of things like that. But I can see multiple different data type of ETFs being offered so that their investors have an opportunity to do that. That's some ways that retail investors can access that, but I assume it's going to be an institutional market to start with. So that's kind of what I see future very easily in that way. But you're going to have standardization of some of these products. You're going to have a clear group of people who are either producing it, a little bit like, the oil producers want to hedge their prices. And then the consumers, the people who want to basically consume some of that data that's being produced, as well as speculators who want to come into the market and help set the price because they think something's not priced correctly. So those are my thoughts. I don't want to take too much time for the panel, but I can see that happening very easily as we start to basically divide up the data world into particular types of data assets, whether it's consumer, whether it's medical, whether it's pharmaceutical, whether it's financial products. There's a lot of things out there. It's just a question of developing it and finding out what you want.
I mean, Pat, I love the way that you're thinking about this and the framework that's starting to emerge in the conversation here. So I definitely want to go to James, because I could tell, James, as you're listening to this, that you have some ideas that you really want to share. But James, after that, I want to put this bug in ARKA's ear so he can start formulating some thoughts. ARKA, you've talked to me a lot in the past about the idea of manufacturing data into data products. And to me, there's a strong parallel between Pat's conversation on how you can manufacture oil and other natural resources into specific products that then become more investable or more specific. So if after James speaks, if you could speak a little bit to how that perspective of yours on the manufacturing production side ties in with this, I would really love to hear that. So with that, I'm going to go to James Nichols of Braithwaite.
Thanks. So yeah, both Nathan and Pat's contribution there really interesting around how we start to securitize and financialize data. I think the topic I wanted to pick up on is how we, this is the thing that really excites me, is actually how we start to create more data from the real world. So you know, a couple of years ago, the hot topic that everyone was talking about is the Internet of Things, about how we create, you know, with the increasingly low cost of sensors, of all types of sensor, we can gather a huge amount of new data from our environment, about the natural environment, about the way we're interacting with others. And I think that we have an opportunity here to create a ton of new data that then can feed into these data products that that Nathan and Pat have just been talking about. So, you know, I currently live in the west of the USA, I guess as do you, Jen, and ARKA. This is an area of the world that is suffering from tremendous droughts over the well, quite distant history. And I think it's a really interesting area where, you know, actually, if we were able to start measuring rainfall at a more local level, if we start able to measure the flow through ditches where water flows into some different agricultural areas, I think actually there is a whole new water data asset there to be created and traded. And, you know, I know the issue of water rights in the US is incredibly complex, but it's one that hasn't really been addressed particularly for a long time. I think we actually have the opportunity now with lower cost sensors and with the ability to create data assets and to ascribe value to them, to actually start maybe changing some of the incentives that exist to either overuse or waste water, actually to make better use of scarce resources. So for me, I think this is an exciting area. That's just one example, but an exciting area where low cost sensors, the Internet of Things, and, you know, distributed networks enable us to access and incentivize behavior based on all sorts of new data.
Mm-hmm. James, a follow-up question on that. Do you think the companies that are manufacturing things like these sensors, do you think that they, I mean, I'll tell you, I don't think that they have the full scope of maybe imagining what's possible from a monetization of data standpoint. I mean, how can we connect those kinds of companies with people that have an understanding of like the larger scale financial incentives, how that could impact maybe policy decisions, why the data that their sensors collect might be interesting to, as you said, investors, or tying them to something like a water rights data asset or a water consumption data asset. I mean, how do we put those partnerships together? You're somebody who's put a lot of partnerships together in your lifetime, so.
Yeah, it's a great question, Jen. And you know, it comes down to, you know, how do we see this market playing out? Do we see sort of commoditization of the data constructors? Or do we see them trying to sort of go up the value chain and sort of vertically integrating into data economies? And I suspect, given the size of the market, that we'll probably see both. We'll see some players who are interested in exploiting the opportunity to create new data, but in a relatively commoditized way, not caring particularly how that data gets used, and others who do actually see the deeper opportunity to create vertically integrated value chains.
Yeah, that's absolutely fascinating. I mean, so I think that plays hopefully right into what ARKA is thinking about as we talk about the manufacturing of data assets. And ARKA, if you also have some thoughts on some of the business models that will be possible here for either companies that are data generators. I think James also used the term data constructors. I really like that, because to me that implies a bit more production around that. You're not just taking raw data, you're actually helping translate that raw data into its value or utility. And then, you know, for the investors that will want to play in this space, to get in on that, ARKA, could you share your perspective, please?
Yeah, absolutely. Happy to, and thanks for setting it up so nicely, Jen, to address both what Pat said and then James said, and try to like bring those two things together for a second. I think Pat has made some very interesting observations about how the existing investment infrastructure, so to speak, can be expanded to accommodate the framework of data assets. And you know, whether it's future swaps, ETFs, whatever it might be, Pat used the word, you know, data-backed instruments a fair bit, and I think that the implication there, as well as in what James said, and of course, correct me if I'm misinterpreting, is that in one way or the other, the the data or the value of the data is what is backing up a financial investment. And there's an expected return on investment, which basically means a multiplication of value. And that brings us to the very fundamental question of how do you define that value? And how do you define the value of data? And this is obviously something we've talked about a lot during the festival in our past events. And if you're someone who's had any kind of conversations with Jennifer and me on data economics, this is probably something that's come up. And it is very critical in this particular case, because if we just leave the conversation at data is going to become something people can invest in and can be used to generate all of these different types of investment instruments, the simplifying assumption that is not being made by this particular group of people, but is usually made by the market, is that what is being bought and sold is essentially the ability to quote unquote own and execute analysis on data sets. That's essentially what the value boils down to when you think about investing in data. Like what are you collateralizing with? It's like, oh, if let's say, to put it very crudely, if my loan is being backed up, if I'm giving a loan and that's being backed up by quote unquote data, if you default on the loan, I get access to your data. What does that mean exactly? Well, the not naive, but the simplistic, I think naive is a good word from a scientific perspective, not from like a understanding perspective, but a relatively simple approach there would be to say, yes, I mean, it's basically you're just transferring ownership of the data and everything that comes with it. But as we've discussed earlier with kind of our land and resource analogy, there is potentially a much more interesting way of viewing digital data, which is to recognize the fact that it is infinitely replicable. It has some very, very unique properties that physical raw materials don't have. But having said that, if digital data were viewed as raw materials, then it could be used to construct much more interesting products. And when we think about investment products, or more specifically, products that are backing up financial investments, that's where it gets fun. As interesting as it might be for me to say, hey, I'll invest in your company, and if you're not able to do whatever it is, I'm going to get access to your data. That's mildly interesting, but that still puts the onus on me as the investor to find some kind of market for that data that I'm acquiring, and some kind of other entity who will actually help me price and value that. Which again, it's all fine, and there's definitely a market for it, but it's so much more interesting when we start looking at what James was saying, which is why not instead think about developing this market of essentially folks who are whose jobs or whose goal is it's going to be to understand how different pieces of data from different data lakes, data sources, data streams can be put together to create interesting products that will then become attractive to investors. So what people are trying to do today, with whether it's at hedge funds, banks, whoever it is that's trying to create interesting financial products and interesting financial instruments, the domain that they have to play with today is relatively limited to outcomes that can be expressed by financial data, basically financial outcomes. And what we are talking about here, given what James said, is expanding that definition of value to pretty much any kind of outcomes that can be represented in a relatively, let's say, believable and provable way, credible way by digital data. Now, if you tie it back to what Pat said and what Nathan said even before that about the creation of these investment instruments and products, that's when the full scope of this universe starts becoming clear, because at the baseline, you have the data producers, contributors, however you want to think about them. Then you have this whole layer of people who are essentially the market makers, who are essentially helping all these producers understand the full picture of how their data can connect into different economies and help generate interesting products that can then help make new and interesting investment options available. So that's kind of my take, and obviously one of the reasons why this is such an interesting angle for us from a data economic perspective, which is how do we generate digital data backed products that can then turn into interesting instruments for people to invest in. And the most crude way of that would be to look at utility tokens and NFTs, where the value comes essentially from some notion of scarcity and some notion of distributed consensus. But we can go way, way beyond that if we really latch on to the implications of what James is talking about. And I'll get off my soapbox in a second, because obviously this is a topic of great interest to me. But I would also like to make sure that we have an opportunity to explore the flip side of that, which is not just investments that are backed up by data assets, but also investments that are represented. The investment instruments themselves are purely represented by data assets. So today, when we have to construct a financial instrument or some kind of an investment instrument, we think about the legal implications of them, because as long as you can describe it as a contract, that's good enough. But what if you had, to put it very crudely, smart contracts kind of gave us this idea. What if there was an intrinsic notion that the investment instrument had a data asset aspect to it, and that was part of the legal framework of it. And that is also something that's very interesting, is both those sides, which is investments that are backed up by data assets that have value, as well as investments whose instrument is represented by pure data assets. That's also, I think, very interesting. Anyway, Jen, I'll hand back to you.
No, that's fascinating. And I want to give the other panelists a chance to ask questions on that, because I think there was a lot to unpack in that. I mean, James, we've had conversations about like when you're investing in something that's like a cryptocurrency, what are you really investing in? Are you investing in data? Are you investing in like this notion of scarcity? Is it the same if you're investing in like Bitcoin or an NFT? Probably a little bit different, but how different are those kinds of things compared to the kinds of investments that ARKA is talking about that might be possible?
It's a good question. I think sometimes one of the things that we've seen over the past couple of years is almost the investment in faith. So people, believe in. Let's take a relatively silly example, Dogecoin, for example. What does Dogecoin do? It doesn't intend to do anything. It was clearly set up as a joke, and yet it is now the fifth largest cryptocurrency with a market cap in the tens, if not hundreds of billions. It's insane. But people are investing now basically on the belief that others believe in it, and I guess that's called faith. So I'm not sure I understand those market dynamics. I can observe them, try and explain them, but I don't really understand them. I think interesting, on the complete opposite end of the spectrum are the sort of the proliferation of physical data assets, or data assets with a physical underlier, where you genuinely really do know what it is backing this data asset. And for me personally, those are the more interesting ones, because I think those are the ones that have the opportunity to make a real difference to society. There was a question I know that came up from an anonymous attendee. Could the underlying data asset change over time or increase or decrease in value? Makes the investment more interesting. I completely agree with that. I'd say, in my mind, yes, absolutely. If you're looking at a physical data set, that data set absolutely has the potential to grow, to become higher resolution in terms of the insight it provides you. And yes, I think that has the opportunity to create a more investable and interesting investment. So yeah, that's my perspective. I'm not sure if the other participants want to pick up on that one.
One thing that I'd like to jump in here is kind of I remember thinking about, I had a student who wrote a paper for me last semester talking about the Bowie bonds. David Bowie's basically trying to, he issued some debt instruments based on the expected revenue from his song catalog. And it was like a 15-year bond. And the thing is that you also know that Michael Jackson bought the Beatles catalog and actually used that as being the collateral for buying his ranch out in California. And there's a difference between sort of the, with a data asset that you actually, whether you're buying it or whether you have a royalty right. And I'm kind of thinking that, there could be both. Obviously, people could be buying particular data assets and they then own them and they can lease them to other people or, be paid royalties. I'm thinking about like, in terms of like sports data, for instance. I mean, if you were the NFL or Major League Baseball or soccer or whatever, you may actually say, this data is very valuable. People look at it all the time, reporters and others. So maybe what we do is basically monetize that by selling interests, or providing royalties to people. People pay us royalties for the ability to use it. And you can see that happening over time. And I guess the thing is that, how does the market develop? Will it be valuable? And I remember seeing that, in fact, exchanges like CME and ICE, they were making lots of money based on data. And the data, they provided significant, historical data, but they also then, innovated and had more data products. And that's something that you were talking about before, ARKA, in terms of creating new products. It's not just pure hysterical or historical data, but data that you would actually say, well, hold on, we're going to give you some analysis on this. And we're going to help you, if you're a trader or somebody else, to figure out how you might use this or what this indicates or means. And I think that's kind of an interesting, what's the intellectual property right that applies to data that has been improved? And it's a different product than basically just the pure historical data that was there. But all these things we're seeing this happen every day in terms of new usage of data and new companies that are actually in that area of data mining as well as analysis and products. And it depends upon whether you can find somebody who wants to buy the product and what they'll pay. And I think it's just, we talked about this before, Jen, the fact that a bunch of universities are creating data science schools. And, it's kind of like, this is exactly the future because there's so much data. How do you sort it out? What do you use it for? How is it valuable? Who's going to pay for it? And I think it's the future. That's what's going to happen.
Yeah, and Pat, one of the things that to me is coming through loud and clear from hearing from all of the panelists today is that we don't really have that framework or taxonomy exactly in place the way that we do in other parts of economics, other parts of finance, to be able to distinguish between, for example, the NFT, the kind of data asset James was talking about that maybe is backed by the sensors of water flow in agriculture, compared to the kinds of things Pat is talking about, like the royalty share on the David Bowie albums or the catalog of Beatles songs. We can describe all of these things, but we really, in my mind, don't have like that universal taxonomy that is really well understood across the board. But with that, I've got a couple of, oh, Nathan, if you have something to say, please go ahead, and then I'm going to ask a few questions from the audience.
Questions.
Oh, you want to go to, okay, let's go to the questions in that case. So the first one I have, this is really interesting, ARKA. I know I know kind of what your answer would be to this, but I'm interested in others' answers as well. Is fiat currency also a form of data? The strength and power, aka data points of the country or government, shapes the value of the currency.
I think so. I was thinking about it earlier, and now those isn't that by gold, a silver, but another precious metal, fiat currency that has value because the government says it has value. So that's not a lot different than in data that currency. digital currency, right? So,
Right.
yeah, and this is usually and this is here, and therefore was that the commodity is different, but now it's not. So that it different changes the whole understanding of what currency is and makes digital currencies less, uh, less abnormal from traditional currencies. So,
In ARKA, in your opinion, I mean, does our new understanding of the cryptocurrency kind of thing change our whole understanding of what currency is? I mean, is Nathan says maybe and Nathan, I hope I'm not, I hope I'm getting your words correctly. It sounded like you're saying that, you know, why are currencies, fiat currencies worth what they're worth? Because governments say so, essentially, and they can back that up with a military. You know, there's no Bitcoin army. I mean, you know, except for online, but
The
you know,
Bitcoin army fighting with the SEC right now.
Yeah, I mean, these Bitcoin, Dogecoin, these things are worth things because of the, like what you were saying, James, the faith in them and people being convinced that they're worth something. But I mean, ARKA, I'm going to go back to that original question. Is fiat currency a form of data in your mind?
Yeah, I mean, absolutely. I think that a lot of this discussion can be simplified if we look at if we look at currency as first and foremost as being a unit of measurement of value. We can measure value in anything, right? Anything that you can define as a thing can potentially be used to measure the value of other things. And typically, the way that we confirm that that value is in fact true is by consensus. And that consensus is usually expressed by an exchange. If you can actually exchange a certain unit of things with other unit of things, you usually can say that there exists a market which has validated this equivalence. But going to a more basic definition, currency is something that is issued primarily to have its utility in measuring the value of other things that the economy might want to measure the value of. What's interesting about currency, especially about something like fiat currency, which isn't necessarily representative of, you know, to use the term not du jour, but maybe of the decade at this point, the proof of work that backs up the currency, right? The cryptocurrency might be an amount of energy that is spent on a blockchain. The proof of work that backs up fiat currency is the fact that the government wanted to issue a unit of credit into its economy. But whatever that proof of work is, the unit of currency primarily exists as to have utility to measure the value of other things. What's very interesting, and I think what starts becoming the basis of what we call data economics, is the observation that because of by virtue of having the utility of measuring the value of other things, currency itself becomes valuable. So the value of $1 is literally $1. And that, when you think about in terms of currency just being units of data, each unit representing a unit of credit issued by the government, and then you transpose that question to, okay, if you were then instead creating units of data that represented other interesting proofs of work, you know, Bitcoin is an interesting proof of work, a piece of Ether is an interesting piece of proof of work. Your NFT that combines a computational proof of work and the proof of something done in the real world is an interesting proof of work. But having discussed the different classes of data that we just have in this session and throughout this week, what are the interesting other types of proofs of work that we can represent through data, package up to measure the value of other things, and then in the process, make them valuable themselves. And I think that's what becomes very interesting. So to go back to the question, yes, currency is absolutely a type of data. Pretty much everything that you can think of is a type of data, but currency is definitely a type of data. And recognizing that fact opens up all of these fascinating avenues of like, what are the other types of units of data that can be used to measure value and hence become valuable themselves.
So I'd just like to throw in a couple of things here. One of the definitions of currency that I teach about in my class over at Georgetown is that there are three things that you look at normally to decide whether it's a currency. It's got to be a unit of account. It's got to be a store of value, and it's got to be, I guess, something that you can use for holding, I guess, transacting instead of basically the barter economy where you're trading horses for land. It's something that you can carry around, and it makes it easier. That's the reason why, I mean, with Bretton Woods, we basically went to a gold-based economy, but silver, I mean, it used to be the case that a piece of paper that was issued was exchangeable for a certain amount of gold or silver. I mean, when you read about currencies, you have some Pacific Islanders who basically use particular types of shells as currencies. And you have, a history over, thousands of years, people using grains and salt and other things as being currencies. Data might be a currency in the future, but I think the thing is that one needs to basically sort of think about what that people criticize Bitcoin is basically, well, you can't really use it. I mean, the price varies so much that it's not really a good unit of account, because the price that if you're trying to measure how many Teslas a Bitcoin is worth, it might be that it's one day it's 10 and the next day it's 8.5 and the day after that it's 12. It just goes all over the place. So it's not really, it doesn't work all that well because you want something that's stable. And that's the reason why we have stable coins that have been brought in. But I'm just saying that, in fact, kind of like fiat currencies used to be tied to a commodity like gold or silver. We went off of the gold standard back during Nixon. So no longer, it's just, as pointed out earlier, it's what the governments say it's worth. And everybody accepts that. And I think that's the world goes around. I mean, I keep telling my wife, they're nothing but green pieces of paper. And that's true. It's the green.
It's true, Pat, but people, it's not just that the government says it's worth it. It's you can pay your taxes in it. And you can't pay your taxes in anything else.
Exactly. It is actually statutory, at least in the United States, that in fact, when somebody wants to pay a bill, whether it's their taxes or whether it's I owe somebody something, you have to accept US dollars. That is statutory as to settle the debt.
What that means, if we take that one step further, and again, I'm not talking about this from a financial perspective. I'm just talking about this from a data perspective, an information theory perspective. What we are actually talking about is actually as follows. There is a function that generates a unit of data, and that function is that the government wants to issue a unit of credit that generates, let's say, a US dollar. And then what James said is, now there is a utility function that's attached to that unit of credit, which is now you can use that piece of data to pay your taxes, to buy milk, et cetera, et cetera. To Pat's point, Bitcoin is no different. It is exactly the same thing, except the generation function is some computer somewhere solved a really hard equation. Hence, this unit of data was generated. Now, it's up to the market to decide whether I can buy milk with it, whether I can pay my taxes with it, whether I can put gas into my car with it. The reason that Bitcoin can't do that and the US dollar can is because the government of the United States is backing up with its credit that piece
And Bitcoin is being backed up by the Bitcoin blockchain, which is all fantastic stuff. But here is the key understanding is that there is nothing magical about any of these units of data. It is the consensus, it is the market's agreement that yes, I will exchange this particular unit of data for milk, my piece of art, whatever it is. That is what injects value into that unit of data.
Now, ARKA, just one clarification on this as well, which is the value of something changes over time. And in fact, actually, it can be higher or lower than it is, today it could be worth X, and tomorrow it's X plus 1, and the day after that, X plus or X minus 1. I worked as a resolutions attorney at the Resolution Trust Corporation, and this was during the S&L crisis, and we had empty buildings that we needed to sell. And we would have people come in and say, okay, so what's it worth? And we say, well, we can tell you what it costs to build it. And we can tell you what the tax assessments are. But what it's worth is basically in an auction environment that is advertised. It's what a willing buyer and a willing seller agree to. And it could be significantly below or above whatever the cost to build it was, and or whatever the tax records say it is. So it's kind of an interesting thing for data, because the data value, whatever data asset we're talking about, it may actually increase in value, it may decline in value. We don't know, but this is one of the big things about getting the market to help you, first of all, define exactly what the data asset is, and then tell you also what that particular data asset's worth at any one point in time, because I think that it's going to fluctuate over time. And that's something we need to, find out.
Yeah, Pat, I agree. And there's another question that came in that's related to marketplaces and markets. So I think we should take that question and get a little bit more into this discussion of how these data assets would play out in a marketplace. And that question is that a lot of, and the example is the financial data provision. So you had mentioned Bloomberg before. Seth, who's asking this question, mentions Bloomberg, FactSet, Icon, DataStream. He says, what would it take to decentralize this data provision? So essentially disrupt this market by having data, I would think, coming more from the data generators rather than the data middlemen. Can you simplify the licensing for data buyers? A la carte data series, two-sided data marketplaces. What would a decentralized version of one of these marketplaces look like?
Well, before we answer the question, this is a really interesting topic, particularly in Europe. I'm not so much sure how much in the US, but a lot of the data providers of financial data, the traders whose data it is, I think are quite upset about how much they are charged effectively for their own data to be provided back to them in aggregate form. So yeah, it is a really interesting one.
Yeah, and James, I would say the same thing is happening in kind of like the biotech and pharma markets. Hospitals are realizing that when they try to make deals with, for example, pharmaceutical companies, the pharma company says, wait, we already have all your data. We bought it from the electronic health record company years ago. We actually are better at analyzing your data than you are because of how many analysts we have. So I think that this is not specific to the financial market. We're seeing across the board. I think about it a little bit the way, you used to have to call a travel agent to book a plane ticket. Now there are many different platforms to allow essentially consumer access directly to these platforms. Are we going the same direction with what we now call like big data?
So if I could follow up on James's and your comments
Please.
on the decentralization issue. One of the big issues that's been argued about for years, and probably will continue for years to come, is a lot of market participants, large dealers and others, argue that in fact the exchanges themselves are basically taking all of their information and monetizing it. And to the extent that they're talking about trying to decentralize this, there's actually a function that the exchanges play in terms of having people submit bids and offers and then have transactions occur, that it actually is separate and apart from the submission of by individuals and entities of bids and offers. And you really don't, the actual bids and offers that come in from a particular entity may or may not have much value by itself. It's the actual centralized marketplace and the determination of what the market says something is worth at any particular point in time, which is going to change. We all know that. Is that provides kind of like what is really valuable. And I know that the dealers are very upset about the fact that this is something that the exchanges are able to do, or at least they think that they own all that. And they say we should be paid something. I think that's true. I think that the dealers and all the other market participants help create the value. But the question is how much should they get? Are they, talk about some of the algo traders who are always submitting and canceling bids and offers in thousands of markets. Are they supposed to get as much value out of the bids and offers that they submit, or just for the transactions which actually get settled? I don't know, but the exchanges and finding out what is actually a market clearing price on something is much more important than basically the bids and offers that are submitted. I mean, that tells you what the market is saying, as opposed to just one individual view of what's going on. So this is playing out with respect to what's going on at the SEC with respect to what are the data fees that the national securities exchanges are charging. And I think it's an argument that will continue, and maybe this is something that Lydian can handle. But it's a problem that people consider, that if I put in a certain number of bids and offers and transactions occur, why is it that another party is getting to basically monetize that? And I think there needs to be another analysis of that. I'm not sure you can decentralize it, but there may be a fairer way to split up the value chain that's being created here, and that might be something that we can do. So that's a thought.
Yeah. I think that's fascinating. And actually, if you look at how the markets have evolved in the past decade, you now have market-making funds who see so much value in that order flow, in the bids and the offers, that they're prepared to pay payment for order flow to brokers to bring their customers' order flow to a fund rather than take it to a national exchange. It's fascinating, and that has pretty profound ramifications for the price discovery mechanism that Pat, you've been talking about in public markets. If more trading, if people see such value in the data that trading flows gives them, that they take that into dark, unlit venues, and the public venues are left with only a fraction of the flow. We all, well, do we lose something? I don't know. We certainly, the data economics have moved to different participants.
ARKA, any other thoughts? I saw you nodding along a lot there, and I know we're coming up on time as well. So maybe ARKA, any thoughts, and then closing thoughts?
Nathan has any other thoughts to share? And the only other thing I'll say is, we didn't get enough time to explore this today, but this is, as we know, just the start of many other such events and sessions that we're going to have through this summer and later this year. So one topic that I would love to also talk about is the democratization of access to investment. So, it's unbelievable that with the appetite, the investment appetite that we have discussed that exists in the market, that we haven't made it easier for enterprises, whether it is a traditional like technology company type enterprise or just, a small mom and pop shop, to have access to better investment options, better capital options, especially coming out of the pandemic. And I think that it is a shame if we are not able to figure out more sophisticated ways to use data-backed instruments
to make investment and capital available from willing participants in the investment market to those who can really drive enterprise, whether it is at the grassroots level or at the high infrastructural level. Anyway, with that, if there's any thoughts that you or Nathan have, I'll hand back to you.
I respect that it mentioned the as the version of the order flow, and that's how prison commissions are brought to zero. Robinhood can offer customers $0 stock trades because they're selling that order flow. And so the analyzing the individual app users have become the product themselves, and they're getting paid with commissions. So it's just as a different change from the old model of, okay, I want to buy a stock, I'll pay $10, $20 to buy it. Now it's free, but your trade is not executed in that perfect market. It's an executed perfect worst price in this private market. The vehicle bought the overflow. So different changes that dynamic as well, for sure. And whether it's better or worse, we'll see.
Yeah, Arka, any other closing thought there? And then I'll let Pat and James give their closing thoughts because I know we're over time. You're good to go. All right, James and Pat. Nathan, thank you for that. Those closing thoughts. And James and Pat, anything else to add? My closing thought is I'm going to take this tape to the networks and ask if we can have a Sunday morning show, because I thought this was some great TV.
Oh yeah, absolutely. I'm ready for it.
So let me just make a point here. I think Nathan, I loved your slides and your point about Archegos and looking at that. And yeah, I think there's one question that you have on this, is that you were asking about whether we could have avoided, or some of those broker dealers or investment banks could have avoided losses. And I think this is sort of like, they may not have known what they were looking at. They may have had the data, but they didn't know what it meant. And this is kind of an issue, as you see, with respect to one of the criticisms of the SEC and the Archegos situation, is that they haven't set up a security-based swap data repository to receive these total return swap information. And the question was whether, if that would have been set up and that information had been submitted, would the SEC have seen that, in fact, this problem was developing, and jumped in and saved, the various broker dealers and investment banks from all those losses? I don't know if they would or not. I mean, the data might be there, but they may not be able to interpret what that means in terms of the losses or the capital structure that Archegos has. Do they have the ability to make the margin calls? Can they do this, that, and the other thing? It's just, this is going to be a continuing question about, well, I've got the data, but what does it mean, and what should I do? And that's the reason why we talked about providing, new data products that are informed and tell people what to do. And maybe it's a little bit of artificial intelligence and machine learning put together. I see the data, but what does that mean? And what does that tell me to do? And I think that's the future. And hopefully it's going to basically lead to a better world and fewer Archegos situations rather than more, right?
I hope so.
I hope so too. For sure. So James, any closing thoughts on your part? And then we'll let everyone get back to their Friday afternoon.
I'd just like to say a big thank you to you, Jen, and ARKA for inviting me to participate in this and the other sessions we've had this week. It's been a tremendously interesting week. I really enjoyed being part of it and really looking forward to seeing how the data economics world evolves over the next few months and years. So thanks.
All right, thank you so much. So with that, everybody, thank you so much for those who've stuck with us a little bit over time. It's been really appreciated. This has been super fun. If I could, press a button and Zoom a cold beverage to all of you right now, I would. I hope you have a great rest of your Friday, a fantastic weekend. Once again, thank you for joining us here at the Data Economics Festival, and we look forward to next time.